Make no mistake, we are at a critical juncture. We are borrowing 40 cents of every dollar that we spend. Spending is at the highest level as a share of our economy in 60 years. Revenue is at its lowest level as a share of our economy in 60 years. And many of us believe that tax reform must be part of an approach to addressing our fiscal problems. The current state of the tax code is simply indefensible. Our tax code is out of date and clearly hurts U.S. competitiveness. Number two, it is hemorrhaging revenue. The tax gap, tax havens, abusive tax shelters undermine the effectiveness of the tax code, depriving the Treasury of revenue. I believe the combined effect of the tax gap, offshore tax havens, abusive tax shelters is leading us to lose more than $500 billion a year. More than $500 billion a year. In addition, the tax code is riddled with expiring provisions. This creates enormous uncertainty for citizens and businesses, making it difficult for them to plan. If we took steps to simplify and reform the tax code, we could reduce tax rates below where they are today and still get more revenue. Now, let me repeat that. If we were to broaden the base and fundamentally reform the tax system, we could actually lower rates, helping America be more competitive and generate more revenue. Along with lower tax rates, the tax reform would then allow us to increase revenue to help reduce the deficit. I think we also need to be realistic about what is necessary to meet the needs of the nation and return the nation to a sustainable long-term fiscal trajectory. Looking at revenues has led some to argue that revenue should be held at the historic level over the past 40 years, about 18% of GDP. Revenues, I want to point out, at that level would not have produced a single balanced budget in all of that time, because spending exceeded 18% of GDP in every year. In fact, on the 5 occasions when the budget has been in surplus since 1969, revenues have ranged between 19.5% of GDP and 20.6% of GDP. It is this higher level of revenue that I believe provides a more useful guidepost for what is needed if we hope to dig ourselves out of the fiscal hole and set the budget on a sustainable path. Let me indicate that would mean we would have to have very significant cuts on the spending side, because we are well over 21% of GDP on the spending side. We're over 24% of GDP on the spending side. Tax reform gives us an opportunity to lower tax rates at the same time we are raising revenues. Tax reform achieves this goal by broadening the tax base by eliminating or scaling back so-called tax expenditures. Tax expenditures are all of the deductions, exclusions, credits, set-asides in the tax code. They are costing the Treasury more than $1 trillion in revenue a year. That matches all of domestic discretionary spending. And many are no different than traditional spending programs. They are simply spending through the tax code. Here's how well-known conservative economist Martin Feldstein described tax expenditures in a recent piece in the Wall Street Journal. And I quote, this is again from Martin Feldstein, "Cutting tax expenditures is really the best way to reduce government spending. Eliminating tax expenditures does not increase marginal tax rates or reduce the reward for saving, investment, or risk-taking. It would also increase overall economic efficiency by removing incentives that distort private spending decisions, and eliminating or consolidating the large number of overlapping tax-based subsidies would also greatly simplify tax filing. In short, cutting tax expenditures is not at all like other ways of raising revenue." I think this is a critically important point. The President's Fiscal Commission, of which I was a member, issued its report last December, and I believe that tax reform may be the most important component of the Fiscal Commission's plan. Here are the key elements of tax reform included in the Fiscal Commission's plan. 1, eliminates or scales back tax expenditures and lowers tax rates. This promotes economic growth and dramatically improves America's global competitiveness. It makes the tax code more progressive. The Commission's report included an illustrative tax reform plan that demonstrates how eliminating or scaling back tax expenditures can lower rates. Instead of 6 brackets for individuals, the plan includes just 3 brackets of 12, 22, and 28%. The corporate rate would also be reduced from 35 to 28%, helping improve the competitive position of the United States. Capital and gains and dividends are taxed at ordinary rates. The mortgage interest and charitable deductions would be reformed, better targeting these tax benefits. The child tax credit, earned income tax credit, would be preserved to help working families, and the alternative minimum tax would be repealed. That is the kind of tax reform that I believe we need to adopt. The Commission plan was also important because it showed how to reduce the deficit and debt in a balanced way. It included cuts in discretionary spending, entitlement reform, and tax reform. You need to have those 3 fundamental components to be successful. At least I believe that's the case. In total, about 2/3 of the deficit reduction between 2012 and 2020 in the plan resulted from reductions to spending. The proposed spending cuts were significant. I would even argue on the domestic side probably went too far. Taking revenues out of the equation would have made it impossible to attain the desired deficit reduction goals. Cutting spending alone, or as some would suggest, only cutting non-defense discretionary spending, would require such draconian reductions that they simply could not be sustained. Let me just conclude on this chart. Chairman Ryan's roadmap that he has laid out, this is the chairman of the House Budget Committee, I believe proves the point that revenues have to be part of a plan to reduce the deficit and the debt. He proposes discretionary and mandatory spending cuts, but actually makes things worse on the revenue side. The result is that his plan increases the debt as a percentage of GDP for the next 30 years. In fact, he doesn't achieve balance for 53 years. He does not achieve balance for 53 years. He dramatically increases the debt, both in dollar terms and as a share of GDP. To solve the long-term challenge, it will require real compromise and a great deal of political will. We need everyone at the table, and we need to have both sides, Democrats and Republicans, willing to move off their fixed positions in order to achieve a result important for the nation. We cannot continue to put this off. We need to reach an agreement this year. It is time, I believe, for the administration and leaders of Congress, Democrats and Republicans, to sit down and hash out a long-term plan.